Hey everybody, let's continue with the example of Sharon and her law firm. Okay, what I've done is I've analyzed the facts and I've put the accounts that are in the upfront facts into the context of the accounting formulas. You can see as laid up out here in the whiteboard. What I want to encourage you guys to do at home is lay this out on paper if that's helpful. And I encourage you to do this work because this is work, okay? Do not try and dangle all of these numbers in your head and figure it out sort of mentally. What I want you to try and do is lay this work out, if you need to, on paper. If you're comfortable doing it in Excel or Google Sheets, that's fine too. But if you're comfortable doing it on paper, do it on paper. Once you lay it out on paper, you can then go to the homework software and input it into that table, okay? A lot is happening at once with just homework problem number 2. You're getting a lot of accounting logic, you're given new account names, and you're given a bunch of different numbers, and then you're given that big table. And it could be a stumbling block, reasonably so. If it is, this is a good approach to take, and I recommend you take it, okay? And I'm gonna run through it. Might take a few videos to do because I wanna keep these videos relatively short so that you can zero in on the questions that maybe you need most help with, and also just to ease my upload time to get these onto the Google Drive. So let's start out with the first fact, and I'm going to preface it by saying that we have some starting numbers as of July 31st. So this is what was given in the first sentence in the problem. Now we're asked to look at August activity, and I'll make a point that we are going to get down to understand the final kind of exercise here is what's the final activity at August 31st. So the first fact is that she collected $1,500 of an account receivable. Okay, so what I'm going to do is I'm going to fill out this table, and then I'm going to explain the rationale. So $1,500 of an account receivable is collected. Looks like this. Now, it looks like this because she's collecting cash that she was owed. Now, the piece that she was owed, the $1,500 that she was owed, prior to getting the check in hand, that amount was up here in this account. She basically had a right to receive money. Okay, she had a right to receive the money because she had previously provided a service to someone and they hadn't paid her. They said, I'll pay you later in the month, or I'll pay you next month. And she said, okay, no problem. When she provided the service, she recognized the revenue. And we're going to have an example of that coming up, of recognizing revenue. But at the time she recognized the revenue, she didn't actually collect the cash. Instead, she basically created an account receivable. That person has finally come along and actually paid. So we're showing cash going up and account receivable going down, okay? The amount that she is owed goes down, all right? This may take practice, looking at accounts receivables, also accounts payable, which we're gonna look at in a moment. It's gonna take some practice looking at a few problems, and we're gonna be looking at this throughout the course, the whole semester. So be patient with yourselves in terms of grasping this concept. If it's proving at all difficult kind of to wrap your head around. Number 2, she paid $2,500 cash on account payable. Okay, so this is the flip. So she paid $2,500 cash on an account payable. Okay, so she's a lawyer. Let's imagine a business fact. She's a lawyer and she's in the recurring need. She has a recurring need for paper because lawyers need paper, okay? They use lots of paper and they print it out and they print documents and contracts and they need signatures and that kind of thing. She doesn't want to be running out to Staples every couple of weeks and buying reams of paper and shoving them in the trunk of her car and then hauling them up to her office, okay? There's a more efficient way to go about it. She can get a paper supply company to deliver paper to her office on a regular basis, okay? They will deliver, let's say, 50 reams of paper or 20 reams of paper every month. She, in turn, will then be billed, or the paper company will bill her, and then she'll cut a check after delivery happens and send the paper company the money, okay? When the delivery happens, when the actual paper arrives at her place of business at the law firm, she recognizes that her supplies have gone up, the paper supplies. And at that point, she also has an obligation to pay the paper company, but she's not going to actually give the delivery person cash. Instead, she will have set up an account payable. She has an obligation to pay that paper company at a later point in time. What business fact number 2 is getting at is she is actually paying that bill, okay? So she actually sends out the cash or she writes out the check, and the payable that did exist now goes down by $2,500, okay? And by the way, My favorite show ever is The Office, so I will allow you to imagine that paper company to be Dunder Mifflin. If you don't understand that joke, then I encourage you to watch The Office. It's a great show, and it really is a good example of the type of vendor that might engage with a law firm. Okay, I'm going to get into the third fact and forward in the next video.